Right, because that's basically generating the same type of return that a bank is paying in interest for a whole year.
Absolutely.
On a monthly basis.
Yeah. And what we're doing now is this: if we do get exercise, what can we do now? We can buy another parcel of
shares.
Shares.
That's right.
To do what? To re-rent.
And there's no shortage of speculators because there are a lot of people who don't have the capital to buy the block of shares that you then go rent out.
And there's so much liquidity out there in the marketplace. I mean, there's there's over 3,200 stocks. That we choose from in regards to finding the prime candidates, and there's a select parcel of stock that we like that meet our very strict criteria, and I mean it really is a very simple process. I mean we can transact a share launch strategy, in under 1 minute online through an online brokerage platform.
Right.
And we just simply monitor our position over the month. And when I say monitoring, no more than 30 minutes.
30 minutes in total, like 3 minutes a day.
And you can be anywhere. You can be anywhere. I mean, you could be in the Himalayas if you want. You could be cruising a nice, in the Mediterranean on this a gorgeous yacht or what have you. I mean, you can be anywhere because this is a great vehicle because it's the remote location. I mean, effectively, that is your workspace. That is your lifestyle. So it's pretty cool.
Right. So if I were to summarize, what happens is intelligent people acquire inventory.
Absolutely.
So then they have this inventory, they make this inventory available online to all those speculators and traders that on a daily basis are trying to turn their money really, really quickly. Then they simply write a call that says, here, I'm making this inventory available, and for you to get the right to trade it from me is going to cost you anywhere from 3 to 9% a month.
Basically, it's 3 to 9% of the value of the share. So yeah, that's where you get paid into your bank account.
And how fast do I get paid?
Well, day one. And the cool thing about this is you're not actually dealing with the speculative side of the marketplace directly. I mean, you have options exchange which basically moderate the two sides because what you're doing is this, there's a bid and an ask. There are bidders out there who are the tenants. They're the option buyers, there's the speculators, the real risk takers. And they're bidding to rent out your contract.
Right.
And what you're doing, you're the ask. You're the one who nominates the selling price of your shares if they want to exercise it at a later date, but also you nominate exactly how much rental premium you want.
Now, can you see when you're online, can you look in there and see?
You can view the entire process. It's almost like a little, like a bidding process, and they'll say, well, we want to give you $1.55, and you say, well, I want $1.80. And usually you just meet, halfway, and bang, that is transacted in 30 seconds. Bang, done. And that money is yours, non-refundable. And the cool thing is, how's this, right? Just like a landlord gives a right to somebody else to live in a property, okay? Now, the landlord owns a property, correct?
Right.
The tenant controls the property.
Correct.
And for the right to control, they pay the landlord rent.
Yes.
As a share lord, you give somebody else the right to control your shares.
Right, and I pay rent.
And for that right, they pay you the rental income.
Right.
Which means if they want to exercise their right to buy your shares, if the share price has gone up, they will do so. Which is fine by me because in most cases it means I can make another dip into the money pool. Let me give you an example. Let's say you initially received $1.50 in rental premium. You bought the stock for $20 and you rented it out at $22.50, okay? Right. And so let's say the share price is now trading at $23. Now, it means that the option buyer can purchase your shares for $22.50, but it's now worth $23 for them.
Right.
But how much did I buy the shares initially? For $20.
Right. So you're making another $2.50.
Another $2.50 on top of the initial premium that I received from day one. Right. And that's what I mean by double dipping in regards to the money pool. And there's some great benefits. I mean, and you can go one step further. You're thinking, well, hey, what else can I do with this strategy? Well, what if I told you that if I bought the shares for $20 and the shares and I received $1.50, well, how much did I really pay for the shares now? Think about it.
Well, you got to take the $1.50 off the 20, so you really paid only $18.50 for the shares.
Yeah, it's almost like buying shares wholesale, isn't it?
Yeah, that's right. You're getting a wholesale price on your shares, so that automatically makes it harder for you to lose any money.
And the thing is, it also gives you $1.50 of downside protection, like a buffer.
Right.
Which means that share price can drop $1.50, and guess what?
You're sound.
Yeah, I'm absolutely sound. And you're probably thinking, well, hold on here. But what if it drops $1.70? You're down 20 cents. Well, what if I told you can also buy an insurance policy, utilizing a portion of the rental income you just received?
Right. So the rental income was $1.50. How would that work?
And let's say you bought an insurance policy which cost you, let's say, 75 cents perhaps. And let's say, well, what is your net?
75 cents.
75 cents. And you've got insurance. You have an insurance policy in place, which is to protect further downside of the stock. And think of this: whose money did you use to purchase the insurance policy?
The people that are renting out the shares.
Or otherwise known as
Other people's
none
money.
of your own money.
That's right. No, other people's money. Yeah. OPM.
But you can see there is great flexibility, great control, and this is a real sexy strategy.
Sure. Okay, so let's suppose that I, which I am Mr. Joe Conservative. So what I'm going to do is I'm going to acquire the inventory.
Yep.
And then I'm going to write the contract to make that inventory available. And the minute somebody buys that contract, simultaneously, do I already have it in place to get the insurance?
Well, you can actually nominate whether you choose to buy insurance, and it's entirely up to you. Obviously, it'll affect the amount of rental premium you receive because you'll be using a portion to cover the purchase of the insurance policy.
Right, and there's an insurance company that's tied in with the options trading platform or what have you.
I mean, you can buy the insurance policy, and it's very easy to do. You know what the crazy thing is? In life, we insure everything.
Right.
And let's talk about liabilities here. We insure cars.
That's right.
We insure our CD collection.
Right.
But,
I even have a disability policy in case something happens to me, right?
But our shares are an investment. They're a nest egg, aren't they?
Yeah, sure.
But you know that less than 2% of the population has an insurance policy on their share portfolio? And how many individuals have an indirect exposure to the share market and have no insurance policy whatsoever?
A crazy amount.
Do you insure your own house?
Of course.
Why?
In case something happens.
In case something happens.
Right.
But better to have an insurance policy than not having an insurance policy.
Of course, it's a risk amortization strategy.
And look, and it's once again too, in light of the individual's financial circumstances, entirely up to them. And some of the stocks that I like, that meet that very, very strict criteria. I'm looking for stocks that are also trending in a particular direction, and if I feel I need to buy an insurance policy, then I will do so. But I'll always use the rental premium I've just received to purchase the insurance policy.
Right, so you're using their money to protect your own self.
Absolutely.
And not only that, the ShareLord research team is out there scouring the markets, going through 3,200 stocks to find the ones that meet the tightest parameter to make this work.
Absolutely.
And we get that information as an owner of ShareLord. You get that information
in real time. Absolutely. We have a phenomenal research team based here in the United States. And the picks that come through the ShareLord training diary, we're talking about 5 picks every week.
Right,
and
about
a
20
day, basically. Every month. They meet that criteria. They meet the fundamental and technical rankings and the specific criteria and what the stock is doing in regards to the training process, but also just the pure fundamentals of the stock. The profitability, the board, and the actual the product of the actual stock itself.
Right, and we're not benefiting from those companies in any way. We're simply suggesting that these meet the criteria. That's all.